Social Security benefits, retirement income planning, and the question everyone is asking, will Social Security still be there when I need it? I'm Kristy Osborn, a mortgage equity planner with Fairway Home Mortgage and host of Legacy Years, the podcast. I work with older adults to help them understand how home equity fits into the bigger retirement picture, especially when decisions like when to take Social Security can have long-term income consequences. Today, I'm joined by Marc Kiner, co-author of Social Security and Medicare Facts and co-founder of the National Social Security Advisor. Welcome to the podcast, Marc.
Thank you so much, Kristy. I'm so happy to be here. Thank you for the invite and opportunity to talk about Social Security and planning opportunities.
Yeah, absolutely. Well, I appreciate it. Will you tell folks just a little bit about yourself? Definitely
Sure.
an expert on this topic.
Yeah, I am. So anyway, I'm from Cleveland, Ohio, just so you know. I moved to Cincinnati, Ohio back in 1975. So I've been here now for 50 years, 51, because now we're into 2026. I'm a CPA by trade. I prepared tax returns for about 30 years. And over time, I was getting more and more questions about Social Security. I did not know who to go to for answers. So I thought I would offer Social Security consulting services in my accounting practice. So back in 2008, Kristy, I bought 3 books, read them cover to cover. Ended up with more questions than answers. So I knew I could not offer this service to my accounting clients. So one day I was in a local restaurant, it might be regional, called the Rusty Bucket. And an attorney walked in, somebody I'd known for about a decade. And I went up to his table and I said, Marc, his name was Marc with the K, if he knew anybody who could educate me about Social Security. Well, he told me that his uncle worked for the Social Security Administration and that he was going to retire a few months later. Well, his uncle ended up being my partner, Jim Blair. Jim and I started the Social Security business back in 10. Jim worked for Social Security for 35 years. So in 2012, I sold my accounting practice. I only work in the Social Security space now. And like you said, Kristy, I am co-founder of the National Social Security Advisor Certificate Program. It's an 8-hour class geared towards advisors across the country. After they take the class and they pass the test, they earn the NSSA certificate.
Very nice.
Yeah.
Very necessary, too. I feel like it's a topic that, oh my gosh, it's huge. It's confusing.
It is.
And it's something that impacts almost every single American.
Well, I would say, almost every single American.
Almost.
I thought you said every single American, but almost.
Not every. Yeah.
There are 68 million people receiving some type of Social Security check. That would be retirement, could be kids, could be disability benefits. So 68 million out of, what's our population, 330 million or so? It's a pretty high percentage. I'm one of them. The third Wednesday of every month, Kristy, I wake up and I see some additional money in my Fifth Third bank account because based on my birth date, I was born on February 13th. I get my deposit on the third Wednesday of every month.
There you go. You're one of them.
I'm one of them. I'm one of 68 million. I know you're way too young now to be talking about Social Security.
I'm not quite that age yet, but my husband is.
Okay.
So
is he receiving?
He is.
And what is his birthday? Just give me the numbers.
July 12th.
So he gets paid the same time I do, the third Wednesday of every month.
Yeah.
Yep.
Like clockwork.
Like clockwork. And what is your birth date?
February 19th.
Oh, mine is February 12th. So you'll get paid on the same day I get paid. You get paid on third Wednesday of each month also. Yeah, I turned 70 on February 12th.
Okay, well, that's coming up. Our birthdays are coming up, Marc.
Yeah, they are. I won't ask your age, but I'll be 70.
Sometimes I lose count.
I don't lose count.
I remember one year my kids had to tell me, no, Mom, and I don't remember. It was when I was like 38 or 40 something, and I was aging myself a year ahead.
Yeah, I don't lose count. I just wish I was going in reverse a little bit.
Yeah, wouldn't that be fun?
Yeah, it
would
be.
I feel like probably the biggest question that everyone has and what everyone talks about, all the hubbub, is Social Security gonna run out of money, and will it still be around when it's time for me to claim my benefits? Curious your take on that.
Yes and yes. the trust fund will be depleted in the early 2030s. We know that as a fact. The Social Security Trust Fund has in it about $2.7 trillion and operated at a $60+ billion deficit in 2024. So in the early 2030s, that trust fund will be gone. And by that time, Congress will have to have made some changes to make the system more solvent, even with the trust fund going away. And if Congress does not make any changes, still $1 trillion or more in taxes come in each year. Self-employed taxes, FICA taxes, income taxes on the taxability of benefits. They come in each year. And that will be the money that will be available to pay out benefits to people. So the trust fund will be gone in the early 2030s. There's no doubt about it. But no, the benefits will always be available to people. Maybe not be as much as they anticipated. So, for example, if this trust fund is gone in early 2000s and no changes are made to the system, people like me and my partner Jim will see a 20% reduction in our benefits. But people that apply for benefits later, they'll still get money. Trust fund might be gone, but still, like I said, Kristy, over $1 trillion in benefits are paid out, not paid out. Well, that's true too, but more than $1 trillion in taxes come in, and that will be the money that's paid out. I think this year, we're expecting $1.5 trillion in benefits to be paid out in 2026.
It's interesting because I do think people don't think about the fact that there is still money coming in.
Still money coming in. You got it. Congress will make some changes down the road. They will. The last changes, I believe, and don't quote me on this, I think it's probably back in 1980s maybe. So, some things we see happening, extend full retirement age from the current level of 67 all the way up to age 70, collecting more FICA taxes on your wages by increasing the wage cap, taking away some benefits, maybe instead of being able to collect at 62, maybe now you collect at 64. So there are only two ways to make the system more solvent, right? You increase tax receipts and you decrease benefits paid out.
Yeah. Whew. So let's get into kind of the personal side of Social Security. What do you think is the biggest mistake that you see people making when deciding about when to claim their Social Security?
Well, they don't look at their options, Kristy. They just don't. They turn 62 and they figure it's time for them to begin. So they go online to ssa.gov and log into their online account and they apply for benefits. Or they go to the local office or call Social Security up. Now, the toll-free number for Social Security is 800-772-1213. So either people would go to the online account, or they call that toll-free number and they schedule an office visit or a return phone call to apply for benefits. But the biggest mistake is people don't know what their options are. They just figure, I'm 62, time to apply. That's not necessarily the case. It might be in some situations, but not all the time. Also, people may think that Social Security will help and guide them to the best strategy that might be available to them. Social Security is not allowed to help people. They don't know your financial situation. They don't know what type of assets you have. Their role is only to take your Social Security application, not to help guide you in terms of what you should do, in terms of what strategies you should utilize.
Yeah.
When we teach our 8-hour class, Kristy, we focus on situational Social Security because we know that everyone is in a different situation relating to the Social Security benefits. So let me just kind of read off list. I'm not reading anything, but list what the situations are. They may be single like I am. Folks may be married. They may be divorced. Maybe we have to factor in some young kids. Maybe you're a surviving spouse. What's your full retirement age? It will be probably 66 and 10 months. And then for next year, it's going to be age 67. So people don't always know what the full retirement age is. And another situation they may be in is they can go back 6 months to get a nice lump sum retroactive check. So or people may be at a Super Bowl party and they may be talking to somebody about Social Security benefits. So they may hear from somebody that they took their benefits at such and such age, and so did their wife. And the person they're talking to may think, hey, that's my strategy I should utilize. It probably isn't, but they may think it is. And I can tell you one thing, Kristy, at that Super Bowl party, my Cleveland Browns were not in the Super Bowl that year. As a matter of fact, my Cleveland Browns have never been in the Super Bowl at all, going on 60 years of Super Bowl activity.
I think I saw. Didn't y'all just fire your head coach?
Yeah, they just fired the head coach. Yeah, how can you blame a head coach if you don't have stable quarterbacks? You can't. Yeah. Anyway, this is not the Cleveland Browns podcast, is it?
No, I wish it was. That would be fun.
Yeah, I have a lot to say. So anyway,
I bet.
so the mistake people make is not understanding what their options are, not exploring their options, or thinking a social security will help them to make a decision in reference to when they should collect their benefits. About 5 to 7% of folks, Kristy, wait to age 70. So it's not a whole bunch of people. I'm
Yeah.
single. I take my benefits at my full retirement age. Nobody's going to collect off me when I'm gone. I don't have a spouse. I don't have a current spouse. I don't have an ex-spouse. And so nobody's going to collect off me when I go out fishing for the final time. And so there's no reason for me, Kristy, to wait until age 70. So my full retirement age was reached in June of 2022. My benefits began in June of 2022 at my full retirement age. So the third Wednesday of each month, I wake up and boom, that money is in my bank account.
So how much difference is there really when people claim at 62, full retirement age, or 70? Is
Sure.
it?
Well, it's about a 70% increase if you wait from 62 all the way up to age 70. That's a huge increase.
Yeah.
But people don't do that, Kristy. They just don't.
No.
No one wants to wait to age 70 to take their benefits. I'm not saying they don't want to, but they're just not going to.
Right.
If you're really wealthy and you've got lots of assets, lots of different income streams, and you have a whole bunch of income coming in, hey, then wait to age 70 might make sense for you. But in reality, that's really not the case. People will take, a wife may take her benefits early at age 62, knowing full well she'll take a reduction. But down the road, Kristy, her husband will pass away, and she'll collect as a surviving spouse. So if for a married couple, many times it makes sense for the wife to take early. That might allow the husband to wait until full retirement age or otherwise up to age 70.
Yeah. So I was actually going to ask you that about couples claiming strategies. And so is it, you say wife or husband, but is it really the higher income earner takes later and the lower income earner takes earlier?
Yeah,
Okay.
I don't want to get into trouble here between husbands and wives and who's the higher versus lower
Well,
earner.
I didn't know if it was that or if it was length of
Yeah.
time they're going to be on this earth.
Just in actuality or reality, is that the women are just the lower income earners. That's kind of what it is.
Yeah.
So the wife will take her benefits early. Now, if it's the husband's the lower income earner, he might want to take his benefits early also, probably would, for a different reason. He'll die earlier anyways, and that means he'll collect money beginning at age 62. Guys don't always die before their wives. But if
But
my
they do a
partner
lot.
Jim Blair was with us, he would say, do you know why guys die before their wives?
No.
He would say, because they want to. No, that joke is not at all condoned by me or our company. But it's what Jim Blair says. He has a sense of humor.
It sounds like it. So, speaking of, what should widows or
Sure.
even divorced individuals know that does often get overlooked?
Sure. Well, let's talk about surviving spouses first. So,
Okay.
to collect off of a deceased spouse, the surviving spouse must be at least age 60. Surviving spouse can begin a surviving spouse benefit at age 60 and then switch to their own benefit as late as age 70, or they can take their own benefit at 62 and switch to a surviving spouse benefit at their full retirement age. So surviving spouses have some options that other folks may not have.
Mhm.
But one thing, if a surviving spouse is listening to this podcast, they should contact Social Security and request a benefit matrix report. That report will have on one piece of paper what their own retirement benefit is and what their surviving spouse benefit is. So a surviving spouse should contact SSA at 800-772-1213 and request a benefit matrix report.
Okay.
I always tell that to my surviving spouses that contact me. That's number one thing they need to do. And in terms of divorced spouses, to collect off of a divorced spouse must be, let's assume I'm divorced. For my ex-spouse to collect off me, she must be single. She must be at least age 62. We must be married for at least 10 continuous years. And this is a very important fact. I must be receiving a Social Security benefit. So if I'm not receiving a benefit, she cannot collect off my work record. However, that requirement goes away if we've been divorced for at least 2 years. So if we've been divorced for at least 2 years, my ex-wife can collect off my work record, even if I'm not receiving a Social Security benefit. So divorced less than 2 years, I must be receiving my benefit from my ex-spouse to collect off me, and she must be single now, and she must be at least age 62. If we've been divorced for 2 years or longer, then that requirement goes away. The requirement that I be receiving my benefit will go away, and she can collect off my work record even if I'm not collecting a benefit.
If she gets remarried, though, she loses that.
She loses that, yes. Yeah, but there's one planning strategy here. If she gets remarried and her new spouse is collecting Social Security, she doesn't have to wait 12 months to collect off his record. She can switch immediately and begin to collect off his record. So she loses the benefit off the ex-spouse and begins the benefit off the current spouse. Yeah.
Wow.
Not many people know that. Usually, to collect off of your current spouse, you must be married for 12 months. No big deal. Who isn't married for 12 months? Easy enough to get to. But that 12-month rule will be waived if your benefit off of an ex-spouse goes away because you get married to somebody else. And that somebody else is collecting their own Social Security benefits.
Got it. A lot of people will talk about income. Maybe they're still working and collecting Social Security, and they're worried about taxes or owing back Social Security. How does that work?
Well, those are two different issues.
Okay.
There is an earnings test. If you make over, and I'm kind of estimating this a little bit because I don't have the figure in my mind, $25,000. If you make over that, Social Security will withhold $1 for every $2 you earn over that dollar amount. So if you earn $35,000, Social Security will withhold $5,000 in benefits. Now, that $25,000 figure will go up the year that you turn your full retirement age. It goes up to about $65,000 or so, and in that case, you lose $1 for every $3 you earn over that dollar amount. Now, the good news is this: even though you might lose benefits due to the earnings test, when you turn full retirement age, Social Security will recompute your benefits to give you more money each month for the benefits that were lost due to the earnings test. So you'll get that money back over time, Kristy. You just won't get it back all at one time.
Got it.
So earnings test is, you want my honest opinion about the earnings test? Am I allowed to use a word that begins with S? It sucks.
You can.
It sucks. There should be no reason at all that somebody earned income is limited and their benefits will be reduced if they go over a dollar amount of earned income just because they're receiving Social Security benefits. That is just mind-boggling. Social Security is thinking about changing the terminology from full retirement age to full benefit age. There should be a distinction between between retiring and claiming your benefits. You don't have to retire from your job to claim your benefits, but you shouldn't be impacted. If you earn too much, you should still get your Social Security benefit. You get it back anyways over time. Why withhold it?
Right.
Now,
I would say that it doesn't surprise me with a government entity that there's that kind of convoluted.
Yeah. It's crazy. And that's why I began my benefits, Kristy, at my full retirement age. The earnings test is not an issue for me. I can make as much as I want. And the other question asked is about taxes. So,
yes.
Yeah, people are taxed on benefits. I am. Most people are. You'll be paying, if your income, if you're married, filing joint, income exceeds $35,000 or so, I'm kind of estimating a little bit, you can pay up to 50% of your benefits may be subject to income tax. If your income exceeds $44,000, then you could be paying tax on 85% of your benefits. And these dollar amounts, Kristy, are not indexed for inflation. So every year, more and more of folks pay taxes on their benefits.
Oh, wow.
It's ridiculous. There's a
Mhm.
proposal in Congress to kind of make the taxation benefits go away, but the Social Security Trust Fund brings in a lot of money by the taxation of benefits. It's not going to go away. But what they should do at least is index those threshold dollar amounts for for inflation. They should do that at least.
Yeah. Of course, they're not going to quit taxing it.
No, they're
You
not going to. And I don't mind paying tax on my benefits. I don't like it, but it helps to stabilize the trust fund a little.
That's true.
Yeah.
Okay, so this is kind of an interesting question. What do you think surprises people the most once they start receiving benefits?
Well, people don't know. So let me say this. Okay. And I'll answer your question. So I
Okay.
began my benefits in June of 2022. And then when will I receive my first benefit payment? It's going to be the next month. You get paid a month behind.
Mhm.
So I began in June. I get my first check in March. So people need to know they get paid a month behind. If somebody applies for benefits to begin in January, benefits will be effective in January, but the first check will be received in February. They'll get paid on either the second, the third, or the fourth Wednesday of February. People don't also understand that the delayed retirement credits. If you wait beyond full retirement age, you get paid 8% more per year. That's the amount your benefit goes up. Others up to 870. To say it another way, your benefit goes up by 2/3 of 1% per month. 2/3 of 1% per month times 12 is 8%.
Got
So
it.
the benefit goes up 8% per year. So if your full retirement age is 67, you wait to 870, now your benefit has gone up 24%. And Kristy, that increase is permanent. So it's going to be with you for the rest of your life. And if somebody's going to collect off you when you're gone, they'll get more money for the rest of their life too. So, but people don't wait to 870. I told you that before. So it's very few people that will wait to 870 and get the maximum they can in DRCs. But they will wait beyond full retirement age for the most part. Maybe they'll claim at 68, maybe at 69. So maybe they'll get 8 or 16% more in benefits for the rest of their life also. So not knowing they get paid a month behind, not
Mhm.
understanding those delayed retirement credits. Also, people may think that as they continue to work, their benefit may go up. No, that's not what they think. They think their benefit will go up, WILL, not MAY. That's not necessarily the case. Benefits are based on the highest 35 years of indexed earnings. So we will index your earnings for inflation to bring them up to today's dollars.
Okay.
So my income that I earn in 2025 may not be high enough to increase my benefits. They won't be high enough. I already know that. And so if somebody's already has their 35 years in, or they're already receiving their benefits, it's quite possible that if they continue to work, additional earnings will not increase their benefits. And if it does increase their benefits, it'd be by $1 or $2. It won't be a windfall. People don't know that. But the good news is, Kristy, benefit increase will be automatic. As soon as their earnings are posted to the earnings record, I can't say as soon as, because it might take longer than that. Eventually, Social Security will recompute the person's benefits and give them a lump sum check going back to January 1st of that year. I understand that it might take them until September or October to get around to that, because they don't really know if you have any business income that needs to be reflected in your earnings until October 15th. And so it could take a while.
Yeah. Yeah. So that doesn't happen very often,
What's that?
that increase, because by that time people are not earning as much as they had been earning before.
Yeah.
Yeah.
Not only that, but yeah, I don't disagree with you, but not only that, since prior years' earnings are indexed for inflation, what you earn in 2025 probably won't be higher than the lowest indexed amount used in the 35-year calculation. That's the
So-
reason why the benefit may not go up.
So when you're looking at, how they send you the estimated Social Security benefit, well, they don't necessarily send that out anymore, but you can go look at that.
Yeah, you can look at it.
When you're looking at it, that's the actual amount. It's not
Yeah,
the
it is.
inflated amount.
No.
Okay. You don't
But-
ever see that?
No, I never see it.
Okay.
It goes on behind the scenes.
Behind the scenes.
I
Got it.
could compute it. It'll take a while. I just need to know. I only need to know two things. need to know my earnings per year, get that off of my online account. And everyone listening to this podcast must have their online account set up. And number 2, Kristy, I go to SSA.gov and look for my indexing factors. Once I know my indexing factors and my earnings, I could compute my indexed earnings.
Only a true math nerd would say that, Marc.
Well, I'm a math nerd, but honestly, Kristy, I don't know what my indexed earnings are. I've never looked. I'm not going to take the time.
Just the fact that you're like, I could do it, Kristy.
I could do it. I teach an 8-hour class, so I know how it gets done. But I'm not going to do it. I do like that you.
Yeah. I was going to say, I do like that you told people to set up their online account because everybody should do that.
Mm-hmm.
When you go there, you can set up just your Social Security. You can set up your real ID to get into all your government things.
Well,
which do you recommend? Just the Social Security login?
Well, I'm not really prepared to answer that question, but you're right. Because I know there's a couple. I don't know what they are because I don't help people set up their online accounts. My partner Jim does, but I don't. But when I log into my account, I go to SSA.gov and I press the buttons I need to press to log in. I'm sorry, Kristy. That's one question I really can't answer too well.
You're good. You're good. But everybody should do that. I have that set up for sure.
Everyone age 18 and older should have their own online account.
Yeah.
Because if you don't, people in Russia and China, they can set one up for you. And they probably have.
That's right. You need to take control of that early.
That's right. Or no, I won't say anything else.
Okay.
I'll get myself and you in trouble.
Don't get us in trouble.
No, we won't do that. But it was okay to say China and Russia people. They can do it. They can easily set up your online account. I can say that.
They probably are.
That's in the news out there.
100% agree. So when we think about a broader retirement income plan, how should Social Security fit into that?
It's huge. Well, let me just say this. It's huge for most people. For me, it's big. For you, it's big. But I used to be involved with a CPA community. And for their clients, it wasn't very big. What's $4,000 to $5,000 per month for those people? Peanuts. And so they never sent us any clients because their clients didn't care about Social Security benefits. But for everyone else out there, including me, Social Security is part of the three-legged stool. Everybody, Kristy, has a three-legged stool. So my 3 legs would be Social Security. My other one would be guaranteed income. Social Security is guaranteed income. We do know that. You get that money every month as long as you're alive. And you're gonna get the COLA. The COLA for this year, 2.5%. Last year was 2.8. So it's come down just a little bit. I almost forgot what I was talking about.
The 3 stools.
Yeah, 3 stools. Okay. Social Security, which is combined with guaranteed income. Other assets that you may have is also a stool that you have. And other types of income that you have. Like pension income, IRA income, B2 income. Yeah, that's my 3-legged stool. Yeah, and 5 minutes from now, I won't remember what my 3 legs are. I'll be 70 in February. That's kind of why. But Social Security, Kristy, it is huge. There's no doubt about it. I know. No, I've got two types of guaranteed income coming to me. I have my Social Security benefits every month. I can count on that. And I have a state pension. I can count on that. So every month I get 2 guaranteed income payments. And that gives me the opportunity to kind of semi-retired, which I am. I'm semi-retired. I get the guaranteed income regardless of anything else. So that's really important. And Social Security is guaranteed income to me.
Yeah. And I do think as we age as a society and my generation starts to retire, Generation X, we don't have pensions. That's like a thing of the past. So the Social Security will be our guaranteed income.
15% of Fortune 500 companies still have a defined benefit plan offered to employees? 15,
Crazy.
That's 1/5. It's not many.
No,
I agree.
not at all.
I agree. If it wasn't for Social Security and the fact that I do have a state pension, I wouldn't have any guaranteed income. And that would put me, Kristy, in a much different situation. And that allowed me to collect it full retirement age. I was not going to wait to age 70. Waiting for me, it would be like 3 years and 8 months additional. To me, that wouldn't have done any good to me.
Yeah. So I ask everybody that is on my podcast the same question at the end. So I'm going to ask you, and you may or may not have an answer. You may feel like you covered everything, but I always like to say if there's one additional thing or piece of advice that you would give people about your topic of expertise, which is Social Security, what would that be?
Plan for your Social Security benefits. Run your options. Engage a professional to work your options through with you. Do not assume Social Security will guide you because they're not going to. But if you have an advisor, go to your advisor and talk to them about your Social Security options. Don't rush down to Social Security to apply. You can't rush down anymore. You have to call them up and schedule an appointment. But
Yeah.
don't go down there when you're 62. Plan for it. Married couples may have like 10 to 12 options available to them. And the option that's going to give them the most money, Kristy, is for both husband and wife to wait to age 70. But that's not going to happen. Yeah, maybe you'll have a lower income earner take earlier. The high income earner will take somewhere between full retirement age and age 70. But plan for it. People paid in FICA taxes for 35 to 40 years, and they don't plan for that. And they don't have anybody they can really contact at the Social Security Administration to talk to them about what their options are. That's why they have to talk to somebody like yourself and other advisors. If you've been paying 30 to 40 years of life insurance premiums in, Kristy, you can talk to your life insurance agent and talk to them about what they can do with that policy and what's the best way to annuitize it or whatever. But you can't do that with Social Security benefits. You can't talk to anybody at SSA and say, hey, please sit down with me for 2 hours and talk to me about my options.
Yeah.
So
I think
plan.
that
You
is,
need to plan.
plan. That's a great piece of advice. And I do think pointing out that you can't talk to the Social Security Administration people. That's not their job. That's not what they're there for, is an important concept that people don't really understand.
They don't, but it's there.
Yeah.
It's in the news. Social Security in the news, articles in the paper I read a couple of days ago relating to potential changes down the road. But Congress will make some changes. They just need to. The question is when.
Well, thank you so much, Marc. I appreciate your time today, and all the information that you've given us is really good. I hope people take the time to listen. I hope they take the time to plan, and I hope that this helps them.
Thank you, Kristy, for having me. I appreciate the opportunity to talk to you about Social Security. Definitely.